This is the Leadership and Insurance Podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology, and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Good morning and welcome to the Leadership and Insurance Podcast. I'm your host, Alex Bond, and I'm very fortunate to be joined by Joe Zuk, who is operating partner at Altamont Capital, among many other things. I was actually just reviewing your LinkedIn profile. I was like, if I give it all that header, that's most of the podcast gone. So I'll probably stop at that, if that's all right, Joe. But welcome, sir. How are you?
I'm well, Alex. Thank you. I appreciate the opportunity to be on the podcast today.
Yeah, no, thank you. Well, we're sort of swapping invites, aren't we? You were very kind to invite me out to speak to some of your portco about recruitment, and we did that, and then very kind to return the favour to come on the podcast. So and I'm sure you've got more interesting things to talk about than what I usually talk about. So we always want to start with an introduction. I think lots of people know who you are, but it'd be great to introduce yourself and Altamont, but also into what makes an operating partner within that as well. So that would be good to understand.
Well, I'll try to keep it brief. So again, my name's Joe Zuk. I'm an operating partner with Altamont Capital Partners. Been working with the firm for over 6 years, but really known the firm's principals for over 10 years. I was fortunate to start my career off, like many, introduced by family as a reinsurance broker early in my career in New York City. Made the transition to reinsurance underwriter and then back to broker. I like to say after 10 years on the reinsurance side, I got an MBA in primary insurance, working for two MGAs, building out their commercial and property insurance verticals, and running corporate development and strategy for each of those MGAs. At the same time was bringing in private equity, and that's where I got exposed to the world of private equity in about 2014 or 15. Actually got to know the folks at Altamont through a cold call out of Target Markets and proposed a couple ideas around roll-up strategy and aligned capacity and so forth. Was fortunate to join at the end of 2019, where we've grown in the insurance vertical from roughly 2 portfolio companies to soon to be 9 here at Altamont. Altamont's a little over a $5 billion private equity firm based out of Palo Alto, California, founded by Jesse Rogers, Keanu Schwartz, and Randall Eason. Mid-market investors focused on financial services, where the preponderance is insurance, but they also invest in specialty finance and as well as industrials and consumer multi-unit.
Amazing. There's a lot going on there. We haven't actually had much on the private equity side on as well, and it's very interesting because I think people outside looking in. Before I'd worked in insurtech, I never really focused on venture. It was all very large, kind of big corporates, and private equity was you sort of touched on a few times, but very different sort of agendas, growth strategies, and so it's therefore looking at different things. But quite some timing, 2019 to kind of join this market, particularly on this kind of insurtech kind of wave we've been on. Was that by a happy accident, or was that by design? Did you see it coming, Joe?
I wish I had the foresight, Alex, to say that I saw the impending hard market and so forth. It was certainly a happy accident. I was at Orchid Underwriters at the time in 2019, which was a really interesting transitional year. And so you talked a little bit about history before we got on the pod and so forth. So in 2017 and 2018, we had, if you recall, we had back-to-back cat years, which was coming off of a long 10-year, pretty much soft market. And even going further back, you had 04, 05 with cat years. So, 19 was an interesting transitional year because Lloyd's, if you recall, started with decile 10. And that was really, I would say, the advent of the hardening or the firming of the insurance market. Then, of course, we had 2020 with COVID, and that really accelerated things and structurally changed the market in a lot of ways. So the timing for me personally joining Altamont, but I think the growth of our insurance ecosystem at Altamont via our various portfolio companies was quite interesting. And I always say, look, our teams across our portfolio companies have always done really well in operationally out executing. But we've obviously benefited from the tailwinds of a really nice hard market over the last 5 or 6 years.
Yeah. Yeah, I always think about my entrance into being like Mr. InsurTech recruitment. I didn't call myself that as well, by the way. And it looks like I had a lot more foresight than did. And I just was particularly bored of doing like very traditional insurance roles, and I wanted to work with more venture and private equity backed businesses so I could talk to the C-suite without going through procurement. And I always think it makes me look wiser than I am. I was just accidental, but that's life, right? You gotta work hard and get lucky at the same time. So that's an interesting thing. So we're here to talk about the year review. So thank you for being part of that. I think you've just got a really good, like very wide industry lens. You and I've interacted about things like InsurTech, but and AI and technologies coming in, but a lot of what the portfolio is just really good underwriting done well, or taking processes that need to be improved. And like I'm sort of starting to think InsurTech is less and less of a helpful moniker, really. But for want of a better word, that's what we've got. What's 2025 been like for you? Any kind of particular trends you've been interested in? Any things you've kind of observed in the market that's kind of maybe different than sort of previous years that we've been through?
No, it's a really good question. I think kind of looking back at 25, we'll probably see it as a pretty transitional year, right? As we talked about, the fundamentals of the hard insurance market, gradually downshifting, certainly in property, but I think folks almost forget 48 weeks ago or so, we had the devastating California wildfires, and everybody thought that was certainly going to be a huge loss to the reinsurance and the property insurance market. It was certainly a significant loss. But I do think the industry, has seen, even though it's been a quiet cat year, both on the windstorm side and the convective storm side, we've seen degradation in pricing, but also we've seen kind of I think a slowdown in private equity multiples and general uncertainty permeating the larger macro economy, which is starting to kind of show in some ways in the insurance industry. At the same time, you've got, to your point on technology and insurtech, the advent of AI, a real now robust conversation about utilizing technology and AI and different approaches to insurance. And so I've written about the augmented underwriter, the augmented claims adjuster. And I think certainly it's interesting for your business in terms of the people side of it. And what does that mean, as we've talked about, over the months, what does that mean for recruitment, and what does that mean for individuals where they may feel some personal pressures against man versus machine? But I actually think it's probably a positive, because as we look at trying to do more, as individuals, as business professionals in our industry, I think utilizing and integrating technology in our daily lives can be quite a powerful force. So we're seeing this as a transitional year from maybe old school ways of doing it to new school ways of doing it. And, certainly there's going to be a lot of bumps along that road, and a lot of things to figure out along the way. And I think that's the high level theme that I see for 25 here.
Yeah, I completely agree, and I think now what I'm starting to see more and more of, which isn't good for my business, if I'm being really honest, is these kind of people going, we want to build a genuine insurance company, and I'll take Meanwhile as an example, Bitcoin enabled reinsurance business, but they want to build this enormous business, but with like 20 people, because the technology's there to do it, and you're sort of getting back to the grassroots of what actually is an insurance contract. It's a promise to pay, but also it's an investment vehicle, and it's just a pile of capital that we've decided to kind of invest in this way. So the most efficiently you can do it as possible is better. And I'm saying that to a bunch of people that are in insurance, but I think sometimes we can walk away from that and we get stuck in underwriting and claims and all these processes and people. And it's like, yeah, you need all of that, but really what we're trying to do is make money off this principal sum, and how can we do that more efficiently? So seeing people come out with these kind of no legacy, and they're right going, if we had to build one today, what would we do? And those opportunities is fascinating to watch.
I think you're hitting on a really other interesting theme as well, as where from the larger risk capital side of the business, right? Capital is becoming somewhat of a commodity, very fungible. I think we do see kind of a downshift in interest rates and increased liquidity next year. There might be some further capital that rushes in again into insurance, especially if we recall in the 2010s when we saw a zero interest rate environment. There was a long soft market, a lot of capital in. And that was a bit of what I'd say the advent of InsurTech 1.0 as well as ILS. And, we may see that wave again, coming into 26 as well. But to your point, I think we're seeing a lot of entrepreneurial people. And I'm pretty sure in the next 24 months that we'll see like a one-person MGA or a one-person claims adjuster. Because to your point, like the cost of compute, the cost of technology, software, the ability to utilize LLMs for, coding. And I'm not sure I fully understand vibe coding, but to that extent that you could build almost your own policy administration system portal and, pretty much get it all teed up where one person could run a mini little micro MGA, for an example, or retail broker or wholesale broker. And I think that's pretty cool to your point of, we're seeing this very modularization of the business occur. Which may actually end up with, more bespoke solutions for customers and insureds, but also probably more importantly from a macro lens as well, producing more dynamic insurance products that cover coverage gaps and are more responsive to the end consumer, whether that's on personal lines or commercial lines, and being able to get that data fidelity to the risk capital side of it. Was pretty cool as well. And so we'll see where the market evolves, but I think our regulatory infrastructure also needs to evolve with it as well.
Yeah. Yeah. I think that hyper personalization of insurance is really exciting. And also I think about things like micro insurance for, less developed nations and if we look at the insurance as this mission to sort of provide safety and security for the entire world and the entire world economy and everyone in it, the economics of it didn't make sense because you couldn't profitably insure lots of these products. But we now are in a situation where we probably can, and I think that's really exciting. And then that personalization thing is like, I've always had some whimsical insurance ideas going, wouldn't it be great to buy an insurance product for that? And then I've even gone as far as to actually talk through some of these with some very kind underwriters and actuaries I know that will listen to my madcap games. But, talking about it going, that book isn't big enough for anyone to be interested. But we're now reaching a point where, well, possibly it now is because we can do it and the unit economics makes sense because it could be this one person MGA. And I'm fascinated by that. But, even transporting it back to my world, obviously I run a search firm and we were renewing a lot of licenses of some of the technology we use. And sadly, for my main technology provider, I just said, I don't know if we need all of this anymore. Like I was just going, I'm having to rethink how we build our business. Is going, I probably would have wanted to have 30 people in 3 offices. I don't know if I need more than about 8 to do probably the same business now, because the tools are there to cover enough ground, and we can do the volume, and we can offer our clients the same service, but we don't need as many bums on seats to do that. So I think the hardest thing, and we talked about this at your open day, is what it means from a leadership perspective and being more nimble. And I wanted to bring that question to you. You're across this portfolio. You've got some great leaders within it. How are they thinking about this? Are you noticing the people? What's the skill that's allowing people to adapt most quickly? Have you made any observations about that? Because I think that leadership thing is the real interesting challenge here.
No, I think it is, right. And it's coming from the top down. So, I look at it from our level, right, at the PE level, right, as an operating partner and with my colleagues on the investing side as well of how do we open and expose the leadership of our portfolio companies to various things that we see coming out of Silicon Valley or San Francisco, right? On the AI side, how that application could apply to insurance or broadly financial services. And then getting the leadership to adapt those tools, or at least keep an open mind as to where they may be able to deploy it in their organization. And I think that dovetails nicely, right, with recruiting and how they think about, one of the neat things for just on a very basic level across our financial services companies is almost all of them, unless they need statutory offices, are virtually remote companies. Now that was born out of COVID, but I think increasingly more and more they're finding tools and AI in terms of recording and being able to summarize, and then now having bots crawl files and be able to prompt whether it's underwriters or people in operations or technology in terms of code pilots to help them code faster and really develop more solutions where we're getting far more efficiency out of our teams, but also being able to, I go back to kind of augmenting the people of it. And to your point, we're consolidating what we even need in terms of technology vendors and other partners as well as our physical footprint. We're also, consolidating, I would say, our technology footprint to, fewer tools doing more and having more kind of automation, which is, I think, a really neat thing to do. And but that certainly starts from the top level down. And I think the culture that we're seeing permeate across is, a combination of sandboxing, which is coming from the ground up, from unique ideas, as well as, folks finding particular AI partners that are really effective in their business.
I think the other thing, just as you were talking, I think about the portfolio and whether it's your role within it or one of the hard things about leading a business is says a guy that leads a very small business. I find it hard enough on my own. I've got about 3 people working for me. But the I think what's important about that day was we're getting the forecast together. They can sort of just talk as like CEOs to CEOs, and how important do you think that is, particularly in this kind of like changing landscape? Because I don't know, I think there's sort of a camaraderie of making these decisions into the unknown, which I don't think people really factor in the human element of those risks.
Yeah, no, I think that's right. I mean, it's a brave new world, right? And it's all scary at the same time. What does that mean, for myself personally, or any individual or leader of our businesses or so forth? But what does that mean for the colleagues and folks they've recruited, or known? I think one of the beautiful things about the insurance industry is it's such a relationship-driven business still in financial services, and such an interpersonal business. At the same time, sometimes we're seeing just natural attrition and not replacement of certain roles because of technology, right? And I think that one of the things that we're trying to promote is more collaboration and, to your point, camaraderie and sharing of ideas of, okay, how are we going to weave some of these themes and the use of AI or the use of technology in their own individual organizations, and what does that mean? And what does that mean sometimes for the people in these businesses, and how they operate their businesses, especially as you kind of look to always improve margins, improve efficiency, grow earnings. That means that I often think about this quite a bit, right? You're in London and I'm in New York, and I visit various offices. Long gone are many of the receptionists now, because so much of AI or technologies has replaced a lot of that staff. And you go into the offices today and they're far more quieter than they were 10, 15 years ago. And I think about kind of what that means now with AI and technology is how much will just be self-serve or driven by bots. which my fear is it takes away some of that personalization as well and that interpersonalness.
Mm. Yeah, it's sad, isn't it? I mean, I think about all the popular gym chains. I know it's a bit of a leap, but most of them now are like there's no staff there. You just like you get a code and you go in and but then saying that what the reason I would use that analogy is because what I like is that there's also been a growth in really expensive gyms which are heavy in the service. So you're going to push both ways, aren't you? We're going to see lots of this kind of self-serve, I imagine, but then we're probably going to see a growth in like I mean, we're already seeing it. It's like, I mean, that's where the kind of WeWorks, but WeWorks on steroids. We're seeing them in London now, where you get these incredible offices, and you think they've got to be so good for us to go now that I want multiple staff on the door, and I want them all to know my name and say hello.
Exactly. Well, it hits on a theme we talked about a little bit earlier, right? I think there's this self-serve, which is like the basic, right? And some people like that, and you or I, probably enjoy certain things that we just self-serve because I don't want to deal with a person, right? But at the same time, if I want a really nice curated bespoke experience that's hyper personalized, that's going to be, humans with some AI augmented technology as well, whether it's gyms or whether it's a hotel or so forth. But if it's just a airport hotel and I can just do everything on my app, including mobile key and check in and check now and order room service, and never have to interact with, and even the little robot now that goes down the hallway to deliver your food. That's okay if I'm just at an airport hotel, but if I'm on a lovely island or so forth, I'd much rather, work with highly trained individuals and WhatsApp communication and so forth. But yeah, I think that's right, and it probably permeates in insurance and financial services as well here.
I think it does, and the parallel I always think about with this with insurance is that, and this is going to be a massive sweeping generalization. So forgive me, insurance brokers of the world. I think there was a lot of that in the broking community that just hasn't been good enough, like particularly in broking. And I'm thinking about my experience of buying my insurance, and like I'm still getting sent PDFs that I have to print out and sign. It's still not signable. But like that stuff just isn't good enough anymore. And the good thing about technology is it's going to make that so stark. It's like, look, I don't even need a broker really. Like I should be able to do all this automated. I'm a small business. I don't need a broker to do this. The fact I do is a failing of the insurance industry. So what's great about this ability to self-serve is that it will get rid of, like, it will raise the bar, I think, of what's minimum expectations. And I think that's the thing that I'm super positive about. And then it allows room at the top end for you to blow me away. And if I'm a really complicated risk, then you have that in-depth, amazing experience. But I think when I think about insurance, I think we've been quite lazy sometimes at this, for example, like SME, SMB insurance. It's not very well served. It hasn't been for a long time. And it's just like, it's too expensive for you to get what you get. It's actually not big enough policy for you to get what you would want. And this allows us to probably go in both directions for that. But I'm going to move on quickly before offending more people in the insurance broking community. I wanted to ask you about next year. Obviously, into 2025, been some great things happening. What are you excited about next year? What are you sort of any predictions you want to make? Well, I won't make you come back in a year's time to sort of check we get it right. So we can say what we want.
Check out that prediction. Yeah, no, it's good questions. So what am I excited about 26? I think, look, I think it's going to be, a further transitional year, but we're going to start to see some crystallization, right, of some themes, right? Certainly, does more capital come into the industry, right? I think we'll see, I heard this term the other day, micro cycles, right? Do we get more kind of mini hard markets in certain segments of the insurance industry? That's what my gut says, is that we'll kind of see, rather than maybe a broad-based hard market, next year, that we'll see these kind of pockets of market that become very hard and pockets that become very soft as capital shifts around. I think we'll see more and more insurtech and fintech folks come in and, to your point, try to customize more of the upfront experience, try to start to sell and develop tools that provide that more hyper personalization across the board. And I think there's going to be a big investment in technology in terms of data capture, and how do we utilize and augment the insurance data set, or the traditional insurance data set, with third party data, or utilize tools to get more data from either exposure, experience, or insureds, and use that to augment the insurance underwriter. I think that's going to be the other big thing that we'll see. Starting to hear some early stage companies focused on that as well, which I think is a double-edged sword, right? Because you get into, certainly very murky areas of potential discrimination and AI making judgment calls on folks that things that could be completely wrong, right?
Yeah.
A Yelp
Yeah.
review that is completely just, a bot. And for example, all of the fun things that we'll have to navigate. And I think on the people side, on the personnel side as well. I mean, as we've talked about, this industry, at least the insurance industry, but broadly financial services, still struggles to attract and retain, really good creative talent. And I hope we can focus on changing that over time, and bring in some fresh blood that can look at our industry in different ways, and certainly stay in the industry for a while.
Yeah. Yeah, that's been the. I think I've given a talk on that once a year since I've worked in recruitment. I think, and but it is I think we're getting better at it, and you and I talked about talent attraction
Yeah.
obviously last month, and there is interesting stuff happening, and there is really interesting stuff with technology, and there are opportunities, and I think the really smart people that get exposed to it, what gives me hope is that I see these, particularly like technologists or people kind of in AI or data, have never worked in insurance before, but once they come in, they go, oh, there's so much to do here. Like from a kind of intellectual curiosity perspective, there's a huge opportunity. So they don't tend to leave. And then the lovely thing is they stay because of the challenge, but also they tend to go, oh, this is actually quite a nice industry. People are quite pleasant. It's very face to face. And I think that's something that I'm going back to this kind of office conversation we had. One thing I'm really protective of is making sure that we still do a lot of that face to face as much as we can. And that sense of community is one of the strengths of the industry. And I think if we ever get to the point of losing that, we're almost losing one of our USPs as to why do this. Because then if it's just moving numbers around, there are other financial services sectors that pay more money. So we'll end up losing people to that. But I agree. Joe, we're about at that time, so I could talk to you about this for all time. I knew we would, because every time we start having the conversation, it sort of it has its own legs. So I wanted to thank you very much for being a guest on the podcast. But I wanted to see if there's any final thoughts. And I was going to say, have you got an insurtech or insurance hero of the year? And that could be a company or a person. And I sprung this on you. But I'm going to do it. I'm going to put it out there. I've never asked anyone this question before, but I'm going to go for it.
An insurtech or an insurance hero of the year, right? Well, wow, that's a really, really good question, and it would be hard for me to single any individual out here as well. And I mean, I wouldn't want to bias with our own portfolio companies as well, but I think. Maybe I'll say this, more broadly, I think it's been interesting to see, I would argue we're probably an InsurTech 3.0, right? So there's a lot of folks now with AI and LLMs in it. And I think kind of as I just maybe reflect of the last 10 years, I would say kind of the hero is the evolution of just the industry in general, right? The ability to adopt from probably InsurTech 1.0, which was saying, hey, we're going to get rid of all the agents and brokers and just go direct. Well, that didn't work out. And then kind of InsurTech 2.0 was, oh, let's try to digitize everything. And that didn't quite work out. Now it's AI and LLM. So maybe I would say that the insurance hero of the year is actually the human, who's been proven to be durable, whether it's been on the retail broker side or in terms of the delivery of the business, whether it be underwriting or claims adjusting or operations, to now where, I'm still not quite convinced AI and LLM, to your point, is going to take away the interpersonal and the relationship piece of this business, which makes it so special and so forth. So I would say it's probably the human individual or the insurance professional that still retains, its dominance in the space for now. And then company wise, I wouldn't want to bias anybody or call anybody specific out. But I think just in general, I think the industry has shown its ability to kind of step up and continue to provide product and indemnity. And so I'll answer it that way. But Alex, I really
That's
appreciate the time and thank you.
No, not at all. That is a wonderful answer to what was an unnecessary difficult question to launch on you with no with no pre-warning. So thank you, Joe. Absolute pleasure as it always is.
A lot of fun today. Thank you.